Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's May 11th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. Remember, we also put the stocks that are giving you overbought and oversold cluster signals within the S&P 500 at the bottom of those emails as well. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee, and we really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And just as we get started here, just heads up, we didn't quite get to 100 likes when I did the video there on Tuesday. So tonight we will have a much more reduced 15-minute version, as I promise you that I will do. I know that's a little bit harder for me because brevity is not necessarily my strong point, but for those of you that are the non-likers out there, I will make sure that I hold up my end of the bargain and make sure tonight's presentation is short and sweet. But for those of you that prefer the hour-long types of videos, make sure you get back into the habit of clicking like for us there again, and maybe I can get back into that routine next Tuesday when I'm scheduled to do it. So let's have 15 minutes here with a quick and dirty review of the market. So first of all, we've got the S&P 500 heat map pulled up here in front of us, and you can see it was mostly a sea of red and maroon colored tiles that were out there. Oddly enough, the S&P 500 was only down about 0.2% today, so it was not an ugly day, but it felt like it. I will say, even looking at my own accounts, it was not necessarily a pleasant day. So I think today was another one of those days where you kind of had a handful of mega caps pulling more weight than might be obvious on the surface. So let's kind of dig into those details here. First one that probably stands out to you is Google/Alphabet. Some of you might have just seen my post there on Twitter a moment ago where I said, Google is now up on a year-over-year basis, and it's been a long time since we've been able to make that claim. Google's only up about, 2% or something like that year over year after today's 4% increase. But prior to today, that had not been the case, right? A lot of the other mega caps have been rallying pretty furiously, but Google was kind of one of those that was just sitting in the back seat, letting everybody else have fun up front. So today they finally got it into gear, and stock was rallying pretty furiously there as they released some additional information regarding their plans for AI and how they're going to incorporate that into their search and onto their apps and different things like that. So the market was enthusiastic there and is allowing them to play a little bit of catch up after we saw so many days of outperformance from Microsoft after their investment in ChatGPT. So this is Google's time to shine, apparently, and they were one of the key reasons that the market was not down significantly worse than it was today, because of course Google at this point is over $1 trillion company. I think it's the third largest company in the United States after Apple and Microsoft. So that was a big winner there for the market. You can also see that Tesla was a pretty big winner. So off to the right-hand side here, you'll see this square with Tesla. If I take my mouse off of it anyway, you can see that. And it was up 2%. Remember, Tesla is also a very important player in the market these days with a $500 billion market cap. And the reason for this one is a little bit different. In fact, most of Tesla's gains happened in the final half an hour of trading. Before then, it was pretty much a nothing burger. But news kind of started circling or cycling through the system that Elon Musk is going to be stepping down as the CEO of Twitter and is going to be replaced by some unknown person at this point, although he did refer to the replacement as a she, so we have a little bit of a clue there, but we have not yet heard the name of that person who will be replacing him, just that he will be replaced. And so most of you are probably aware of the backstory by now, but Tesla has somewhat struggled because there's this assumption by the marketplace that Elon Musk is being pulled into too many different directions. And as Elon Musk was kind of pulled into the fire over at Twitter over the last year, it may have come as a little bit of a disadvantage where he otherwise would have been at the helm of Tesla. Now, technically he was. It's just that you can't spend 24 hours a day in two different places. So he's going to get a little bit more of undivided attention over at Tesla, apparently, in the near future. So that allowed Tesla an opportunity to rally from a stock market perspective today. You can also see that Meta had a reasonably good day. Of course, the old Facebook there, it was up over 1%, and that company was once a dog in the marketplace, but has been a leader for quite some time. In fact, it kind of was leading the NASDAQ before the NASDAQ knew that it was about ready to achieve its full potential. So I don't know how much is left in the tank over at Meta, but they have been a very resilient, bullish trend trade to the upside here for several months at this point. Other communication stocks also did well today. Comcast was up over 1%, Activision Blizzard was up over 1%, and Netflix was up nearly 3%. Now, of course, there is one major exception to that that's staring us right there in the face, and that is Disney, of course, another big communications company. And Disney was one of the worst performing stocks, if not the worst performing stock in the entire S&P 500 today, down almost 9%. This is not a company that typically moves around that aggressively, but last night they reported earnings, and apparently the market did not like what they had to say. From what I understand, the parks division was quite good. So for those of you that are have small children like I do, you probably keep your eye on the prices of going to some of those theme parks. And some of the stuff that you see on social media and what have you is just astronomical in terms of what people are paying to get into those parks. And so that area of Disney is still doing quite well. What is causing the market's indigestion with the stock at the moment is largely around their streaming services. And they did lose subscribers on Disney Plus here more recently. And they're going to have to, figure out a way to make that more profitable, because it's not going to be quite as much of a layup or an easy opportunity to make money off of kind of your typical television the way that ABC used to be able to do. It's a much more fragmented industry these days. And, quite frankly, they're having to pay a lot more for content right now than they ever have as well, just like Netflix and the others have. So not exactly a great business model right now over at Disney, at least compared to the way things had been previously. So that stock really suffered today. And remember, that stock is in the Dow Jones Industrial Average, so it's going to have a little bit of a bigger impact in that index than you might find in some of the other indices that are out there. In terms of other winners that were today, BlackRock was up. I never did figure out why they were up. There's probably a news story behind it, but they were up over 2%. We were actually just talking about BlackRock in my question and answer session earlier today, where we were talking about how it hit the blue zone of the dividend stair-step chart yesterday and might very well be a good stock to keep on your radar. And then all of a sudden, out of the blue today, it just vaults higher by 2%, even though most of the other financials, as you can see, were down. In terms of any major losers, it's kind of hard to pick and choose because most of these sectors were clearly lower. I mean, it looks like every single utility stock was down today. Almost every single materials stock was down today. You had the vast majority of industrials that were down today. You had the vast majority of energy that was down today. Even the financials were pretty one-sided in their approach. Healthcare had a smattering more of green charts there. Bristol Myers was in the green. Gilead had a nice day. RMD, ResMed was up a bit. Intuitive Surgical was up a bit. So a little bit more hit and miss there in healthcare, but definitely still skewed to the bearishness because most of the mega cap healthcare companies did end the day in red. And I would say that it was a tough day for technology as well. Apple was able to kind of retain a little bit of strength, closing just above break even today. Actually has an overbought cluster signal on the weekly candle chart at this moment, but most of the other tech stocks of importance were down today, including Microsoft and Intuit and Nvidia. So tech didn't really help today. Today was kind of driven by communications and a little bit of help there out of Tesla as well. Otherwise, clearly a day where you could say that the bears did win. Let's take a look now at some of the specific numbers. I've got the S&P 500 pulled up here on our index watch, and you can see 155 stocks managed to close in the green today. So that was only about 31% of the market in the green. So the vast majority of companies did close lower. Despite looking at our foregrid, again, you can see it really was not a violent day. The market was only down 0.17% today. So you might have thought that it was kind of a split decision in terms of winners versus losers, but it was actually closer to 1/3 of companies were up and 2/3 of companies were down. So the reason, again, that it didn't look worse than it actually was because Google and Meta and a handful of those mega cap names were kind of masking some of the underlying weakness. You can see that the Dow was down 0.66% today. So again, remember, Disney is part of the Dow, so that's going to have a bigger impact, one of just 30 companies in that area. So that could have been the reason behind the Dow's underperformance today. The NASDAQ actually closed higher, believe it or not. Remember, that has been our leader for quite some time. Google, of course, helps along in that regard as well. So NASDAQ was up 0.18% today as our only up index, and then the Russell 2000 was down 0.84% today. So that was our biggest underperformer. But again, not a very big day either direction, right? We didn't have any big up moves in these indices. We didn't really have any big down moves either. It was kind of a muted, quiet, ho-hum type of a day, which perhaps explains the lack of activity with the clicking of the likes and things like that. It's possible that people are just growing bored of this market and they're not even watching these videos anymore, and that's okay as well. I don't ever look at the market outlook video as though it's a sacred cow that needs to get done. So if these are getting a little long in the tooth for you guys, we can certainly understand that as well, and start pulling back a little bit if we need to. We've always got a million other things that we can spend our time on. So I kind of get the sense that the market itself, all of us collectively, are kind of being lulled to sleep at this moment, just waiting for a breakout in either direction. The closest thing that we have to a breakout, I would say, is in the form of the NASDAQ. As you look at this chart here, you can see that the NASDAQ did hit a new multi-month high here today. We closed higher, so it's a new closing high in addition to a new intraday high on a multi-month basis. However, notice that you did get an overbought cluster signal on the NASDAQ here today. Sometimes that tells you are a little bit too overbought in the short term, and we'd be due for some sort of a give back along the way. So let's keep our eye on that possibility right now. Otherwise, as you can see the breakdown of these charts, the S&P 500 remains with a strongly bullish posture above a rising 30-day moving average. The NASDAQ also remains with a strongly bullish posture above a rising moving average. The Dow Jones has a weekly bearish posture, is trading now below a rising 30-day moving average, and the Russell 2000 has a weekly bullish posture, but is trading below a falling 30-day moving average. So we still have quite a bit of differences in the charts right now, depending upon what it is that you're looking for there. But I guess the good news is 3 out of our 4 charts do have some sort of bullishness to them, and so it's not necessarily a done deal that these markets are doomed from this point forward or anything like that. But one thing I did, address with my students yesterday was that the average stock in the market is down over the last month. We have this process that we go through with the factor-based swing trading class where we look at 24 different ETFs from a wide variety of strategies, and 20 out of those 24 ETFs were down over the last month, with only 4 of them up in the last month. It hasn't really felt that way to me, but again, I think it goes back to that theme that I had already mentioned, which is I feel like there's just a handful of stocks that are basically masking underlying weakness right here. And I think that's probably, distorting things a little bit. Anyway, let's take a quick peek here at what's going on with the 3 green arrows system. And you can see that at the moment, we have just one chart with 3 green arrows, and that is the NASDAQ composite down below. All 3 of our other charts have a mix of green and red arrows. And then lastly, let's take a look at our 1040 crossover method as well. And here you can see that at the moment we have just one death cross on the 10-week moving average, still below the 40-week moving average on the Russell 2000. All of the other 3 charts still have their golden crosses, which are more bullish features from a longer term perspective. All right, that's what I had for you. So able to wrap this up in the 15 minutes as promised. Again, if you prefer me to get back to the 1 hour types of editions, make sure you get out of your way there and click like for me there on Twitter. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.